If you've been told that opening an LLC automatically lowers your taxes, you've been sold a dangerously deceptive half-truth. In this video, you'll learn exactly what you need to know, so you don't make any costly mistakes.
A lot of people go on YouTube, TikTok, or forums, hear "open an LLC," and think they've just solved three things at once: taxes, protection, and formality. No. And this is where the expensive mistake begins. Let's get things straight. Quick. In the United States, there are three layers you can't mix up. First, legal structure. Second, federal taxes. Third, state rules. The LLC lives first in the state legal layer. It isn't born as a tax discount. That's the point almost nobody explains to you properly. An LLC can give you order, a more serious image, better operational separation, and a general layer of asset protection in many cases. But tax-wise, by default, it doesn't always change your life. If you're a single-member LLC, you usually still report at the federal level within your personal tax return. In other words, the IRS doesn't see magic. It sees, in general, the same owner reporting the business, unless you make a different tax election. And if the LLC has multiple owners, by default it's usually treated as a partnership, unless you elect otherwise. Myth versus reality. Myth: I opened an LLC, so now I pay less tax. Reality: opening an LLC does not automatically reduce your taxes. The main advantage at the start is usually legal and organizational, not automatic tax savings. And be careful. A legal advantage that's poorly managed can also be weakened if you mix personal and business money, if you don't respect the entity, or if you operate in a chaotic way. Here comes the expensive mistake. Imagine Daniel, a freelance marketer. He bills $55,000, opens an LLC because someone told him, "That way you pay less," pays filing fees, forms the entity, but still gets paid into a personal account, pays for Netflix, personal gas, and family dinners with the business card, and doesn't make estimated tax payments. Result: not only did he not get the magical savings he expected, he also hits tax season with self-employment tax, possible pain from unpaid estimated payments, messy books, and a false sense of security. This detail changes everything. An LLC is not the same thing as an S-corp. A lot of people mix them up as if they were the same thing. They're not. The LLC is a state legal structure. The S-corp is a special tax election with eligibility and real compliance requirements, and if the owner works in the business, it requires reasonable salary before non-salary distributions. That's another level entirely. So, when does an LLC actually make sense? When you're getting serious. When you're signing contracts. When you want a business bank account. When you want to better separate risk and operations. When you don't want to keep operating as if the business is just you with a pretty name. And that's it. But choosing an LLC based on the empty promise of lower taxes is starting off on the wrong foot. Practical case: a freelancer starting out alone. If they're validating an idea with low risk, a sole proprietorship can be the simplest starting point. But if they're already selling for real, signing contracts, serving clients, and want formality, a single-member LLC usually makes more sense as a serious starting point. But make no mistake, don't let anyone sell you the idea that an LLC by itself fixes your taxes. Because it doesn't. Now here's another trap. A lot of people believe that deducting more and having an LLC are practically synonyms. Not true either. What's deductible depends on whether the expense is ordinary and necessary for the business, on the specific facts and on documentation. Not on whether the logo at the top says LLC. You can have an LLC and still deduct poorly. You cannot have an LLC and still keep orderly books. They're different dimensions. And this is where many get into trouble. They think the important decision is to form the entity. No. The important decision is to understand what you're choosing. Risk. Partners. Benefits. The state where you operate. Whether you're going to hire. Whether you need investment. Whether you're just testing the market or already building a real company.
If you find this video interesting and you're enjoying it, please give it a like so this channel can help other entrepreneurs.
Another thing that causes a lot of confusion is the QBI deduction. Some pass-through businesses may qualify for a federal deduction of up to 20% of QBI under certain circumstances. But heads up, that doesn't mean you get it just by having an LLC. It's not sold as automatic. It depends on the full picture, the type of activity, income, and other limits. It's another perfect example of why you shouldn't confuse the name of the entity with an automatic tax outcome. The final takeaway is this: the LLC can be useful. Very useful. But useful doesn't mean miraculous. And the first big mistake of a beginner in the United States usually isn't paying too much tax. It's misunderstanding what they just opened.
If you've been told that opening an LLC automatically lowers your taxes, you've been sold a dangerously deceptive half-truth.
And then there's the hidden cost of the mistake. Filing fees, annual reports, a registered agent if applicable, administrative time, and poor decisions made because you believed you were already optimized. Opening an LLC under a false premise not only doesn't lower your taxes, it can steer you away from what actually gets your taxes in order: separating accounts, keeping receipts, maintaining books, and understanding how you truly pay tax. Have you also been told that an LLC lowers taxes all by itself? Tell me what you've heard, and I'll tell you where the confusion usually lies.
Follow me for informative videos like this and give it a like to help the channel so other entrepreneurs can learn and avoid making mistakes.
Control.